Hello, I'm Donald Leggett, and welcome to focusIR's Stocks to Watch for 2024. It's been a positive year for Trident Royalties, who made 5 strong royalty acquisitions in 2023 and are continuing to build a diversified mining royalty portfolio which differentiates them from their competitors. Here's Trident CEO Adam Davidson to explain why 2023 was a great year for deals, with more to come in 2024. Over to you, Adam.
That's how we've tried to differentiate ourselves, is that we're building out a diversified portfolio. That said, we do want gold in the portfolio, and years like this year are the reason why gold has been bouncing up around $2,000 an ounce. There's been a lot of volatility in the market and a lot of macro events that have driven that. So we're happy to have gold in the portfolio, and in fact, as of today, it's the bulk of our cash flow is gold driven. So very pleased to have positioned ourselves in that way.
Of our key assets, depending on your view on lithium price, probably 25-ish to 30% of our net asset value is directly linked to Thacker Pass. That said, this year has been an exceptional year in that some big milestones have happened at Thacker. The permit was upheld on 2 occasions, and it's now sort of permitting is effectively done. It's in construction. The operator flagged that they're putting $145 million in the second half of this year, and that number is going to accelerate next year as they accelerate construction. And then the other aspect is that General Motors, they're coming in as the largest shareholder of the operator, putting in $650 million towards construction, and they'll be taking the offtake of the stage 1 lithium production and have the right of first refusal over the stage 2 expansion. So to answer the question directly, you'll see a snippet there. You know, at current lithium prices, or sort of thereabouts, I think it's dipped a little bit since then in the last week or so. The royalty, once fully up and running, would pay about $21 million a year to Trident. So the key thing for us is that with that new debt facility, we're lowering our cost of debt. So in a time where interest rates are high, share prices are down, so cost of equity and cost of debt is higher for the miners themselves. In fact, our cost of capital has been reducing now. We lowered it 2% earlier this year under the Macquarie facility, and we just lowered it again over 2% now with this new facility. So we're reducing our cost of capital, which means that we can be more competitive when we're offering royalty financing to the mining companies.
We see quite a few assets that have scope to come into the revenue line item next year. Greenstone, operated by Equinox, is flagged that first gold expected in first half of next year, and then steady state production in the second half of the year. And on that one, we've got an offtake that's annually capped, but we've got an agreement such that if they don't reach that cap, we'll get topped up at a sort of fixed dollar per ounce metric. So that sees a good amount of revenue sort of come into the portfolio that's not there today. The Bandoko acquisition that we made in August, B2Gold has been pretty clear about the scope for that to come into the revenue relatively quickly. It's an exploration asset, but one of the reasons we liked it is it has this kicker where they've made clear they can truck that material to their Fekola mine. It's good oxide that can be processed through their existing plant, and it's higher grade than the material that they'll otherwise be mining as they shift underground at Fekola. So I think we could see that one come in over the next sort of 6 to 18 months. And then you've got sort of growth within the portfolio. The Eagle mine has been expanding production and is expected to continue to do so. The Bula, our copper royalty, has reached sort of steady state of 10,000 tons a year, but is ramping up now to 20,000 tons a year and has the ultimate goal of getting up to its feasibility study level of 56,000 tons a year. So there's a lot of organic growth within the portfolio that will drive revenue, as well as new assets turning on. And then some of the big prizes like Thacker Pass, our lithium royalty, turning on in the second half of 2026. But I think we'll expect to see a pretty steady march forward in revenue.